A warm welcome back. This is Sage and you're watching 𝐊𝐴𝐚 TV live from Sydney. This is the Mid-Market Pulse. Apart from the important market updates today in the show, I will also share a special report on China's trade restrictions likely to fall flat as Australia eyes the Asia-Pacific markets. But before that, let's get started with the mid-market commentary for today and see how ASX 200 traded by lunchtime. The Australian share market slipped in negative terrain by the afternoon, pairing early gains, weighed down by losses in minor stocks as well as index heavyweight EML payments. The ASX 200 is trading lower by 3.60 points at 7,026.70 as gains in healthcare and energy stocks offset by losses in material and industrial space. And early today, the benchmark index opened higher, extending gains for the third straight session, undermining weak cues from US market, which ended lower on Friday. The benchmark index is currently trading 2.04% below its 52-week high. Kogan.com, up over 6%, was the best performer in the benchmark index after the online retailer posted downbeat annual outlooks, while EML payments was the top loser with nearly a 4% drop. On the downside, mining stocks extended the fall for the third straight session amid continued retreats in iron ore prices, and the sector players BHP Group, Rio Tinto, Fortescue Metals, Mineral Resources and Champion Iron fell between 1.5% to 5%. Moving on to the gainers and losers, retail giant Kogan.com Limited is the top gainer on the ASX, followed by Gold Road Resources, Corporate Travel Management, Nuix and NIB Holdings. Buy now, pay later player EML Payments is the worst performing stock on the ASX. Oz Minerals, Fortescue Metals Group Limited, AMP Limited are the top laggards, as well as Deterra Royalties. And next up, commodity market update. The crude oil futures were higher during the mid-morning Asian trade, but up move was restricted due to persistent concerns over COVID-19 situation in the region. August delivery Brent crude oil futures rose 0.92% to $66 US and 96 cents per barrel, whereas the WTI crude oil futures for July delivery traded at US $64.17 per barrel, up 0.93%, boosted by rise in oil prices. Energy heavyweights Oil Search Energy, Woodside Petroleum Limited and Santos Limited trade higher with marginal gains. In the bullion market, gold price rose as correction in US dollar and treasury yields boosted the yellow metals appeal. And the spot gold price was up 0.50% at $1,886 US dollars per ounce on Monday. Index heavyweights Northern Star Resources Limited, Newcrest Mining Limited, De Grey Mining Limited and Resolute Mining Limited were trading in the green. Moving on now, Australian dollar trades lower, the bond yields fall. The domestic currency is trading lower by 0.08% to 0.7725, while Australian 10-year bond yield is down 0.89% to 1.661 on Monday. And before I share the updates on the ASX listed companies that are in the news today, it's time for a quick break. Stay tuned as I'll be back in a short while.
At 𝐊𝐴𝐚 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐚𝐥𝐤𝐴 TV.
Welcome back. I'm Sage and you're watching the Mid-Market Pulse. Let's look at the shares that are in the news today. The share price of AVZ Minerals Limited trades higher by 6.66% at 0.160 Australian dollars after the company updated the mineral resource estimates at the Manono project, including results from the recent pit floor drilling program. And shares of Infomedia Limited fell as much as 8.7% to $1.26 Australian, its biggest intraday percentage loss since the 24th of June 2016, after the company informed that its Chief Financial Officer, Richard Leon, will be leaving after financial year 21 annual results on 24th August 2021. The stock is trading at its lowest level since the 3rd of April 2018. Kin Mining NL reported the final results of recently completed follow-up air core, or AC, drilling at the Eagle Crow prospect. Following the announcement, the stock was trading flat at 12 cents Australian. The share price of Dynamic Drill and Blast Holdings Limited rose as much as 17% to 55 cents Australian, its highest since 18th February 2021, on securing fund for its US expansion plan. In a filing to ASX, the drilling services provider said it has received commitments to raise 10 million Australian dollars by issuing 22.2 million shares in the company. The company stated that a part of fund will be used to acquire the US-based Orlando Drilling Pty Ltd and the rest for future growth plans. Synlait Milk Limited has updated its full-year guidance for financial year 21 after the board and management reviewed the impact of previously disclosed risks affecting Synlait's performance. And reacting to the news, shares of the company rose nearly 2% to $3.10 Australian. Brookside Energy Limited said in an ASX announcement that drilling operations at Jewel Well, located in Brookside's Swish area of interest in Anadarko Basin, are proceeding safely on schedule. The company informed that Jewel Well curve successfully landed in the Sycamore formation at the designed depth, and the liner has been set and cemented. Buoyed by the development, Brookside Energy Limited stock surged 6.5% to 0.024 Australian dollars apiece. Ardea Resources Limited, via an ASX release, updated about the collaborative study with Australia's National Science Agency, CSIRO, on 24th May 2021. The company has completed the gold in nickel laterite study and has identified aspects that will significantly assist future gold exploration. The research suggests the potential for nickel sulfide mineralisation at depth. Moving on to the Japan, China stocks rise in mixed Asian trade. The Asian markets were trading on mixed notes on Monday, tracking muted cues from the US market as volatility in cryptocurrencies and concerns about inflation outlook dented the market sentiment. Japan's Nikkei 225 was up 0.45%, while China's Shanghai Composite rose 0.20%. Singapore's Straits Times also rose by 0.45%. Hong Kong's Hang Seng was down 0.40%, while Taiwan's Taiwan-weighted indices fell by 0.15%. And meanwhile, New Zealand's benchmark S&P NZX 50 traded lower by 0.35%. The next big news is rout continues in the crypto market. The bearish drift continues in the cryptocurrency market, with most of the major coins declining sharply in the last 24 hours. The price of Bitcoin, the largest cryptocurrency by market value, has dropped 7%, while that of Ether the second largest crypto, fell by 9%. The value of Bitcoin and Ether has declined by almost 50% from their respective all-time highs set last month, as per CoinDesk's report. The price of Bitcoin fell to hit a low of $31,179.69 before rebounding to $35,564.63, down 6.3% in the past 24 hours trade. The sell-off was triggered after crypto exchange Huobi said it's scaling back some of its offerings in some countries due to China's crackdown on digital assets. And meanwhile, Ether was trading at $2,145.19, US down 8.95% after hitting a low of US $1,733.58. The Shiba Inu-based meme currency Dogecoin also bled in red, falling 12.25% to US 0.302. And now it's time for a short break. But don't go anywhere, as after the break I will be sharing a special report on China's trade restrictions likely to fall flat as Australia eyes the Asia-Pacific markets. The market takes the weekend off, but your money won't. Get a comprehensive update on the ASX listed stocks and market trends. Watch the experts touch upon the fundamental and technical developments and trending strategies in the equity space. We will be your daily guide as you explore the Australian share market, be it global vaccine developments or China's trade relations or global political turmoil or economic revival prospects. We will bring you live updates driving the equity market trends. 𝐊𝐿𝐴𝐼𝐴 TV. Welcome back. I'm Sage and you're watching the Mid-Market Pulse. Let's look at the special report on China's trade restrictions likely to fall flat as Australia eyes the Asia-Pacific markets. China is one of the leading iron ore importers for Australia. As trade tensions heighten between the two, Australia could potentially be looking at a huge slump in export revenues if things do not go right. As if the pandemic-induced fall in demand was not enough, the imposed tariffs are another roadblock ahead of Australia's economic recovery. Australia has not reciprocated to the move by imposing duties on Chinese imports. Instead, the nation may be looking at options to overcome the adversity of the action taken by China. However, that alone might not solve the long-run problem for Australia. The tensions between the two leading economies started to arise when Australia supported a call for an international inquiry into how China handled the pandemic when it began affecting global countries. Australia had also put legislation to ban foreign interference in the country in response to reports of China's intrusion in political matters in 2016. However, China did not heed these allegations and there were further reports of Chinese interference in the country. In response, Australia and the US decided to take mutual action to confront China about these claims. China's reaction came in the form of suppressed barley imports from Australia, stating customs violations as the reason. This was a textbook response for China, as the country has a history of suing retaliation measures that handicap the economy of those nations that have called them out for their practices. The country's government has also received flack for its treatment of minorities and for making territorial claims on unfair grounds. The bans imposed by China encompass imports of beef, barley, wine, thermal coal, copper, cotton, seafood, sugar and timber. To add to these measures, China also discouraged its students from travelling to Australia, stating racism concerns, and the targeted sectors include iron ore and liquid natural gas, which are strategic sectors for Australia. However, China's move is not expected to impact the Australian economy as severely as expected by the policymakers. Australia would be able to find substitutes to replace China's iron ore demand. China has also made efforts to source its requirements from elsewhere. Last month, China announced changes to the tariffs it had previously imposed. The tariffs were imposed on raw materials used in its steel industry with the intention of encouraging pig iron imports and scrap steel. There were also efforts to try to reduce domestic steel production and encourage iron ore production. China fulfills 2/3 of its steel industry's requirements through iron ore imports from Australia. Thus, looking for a new source would entail finding mines with large unfulfilled iron ore supply. A potential source that China can turn to is the giant Simandou resource in Guinea. However, those imports would be costlier for China. In addition to the cost barrier, they would not be able to serve the Chinese demand fully. Instead, they would only cover 10% of the demand. On the other hand, experts estimate that the Australian economy would most likely not see a drastic change. Large-scale mining organisations like Rio Tinto, BHP and Fortescue would be cheaper to service for the Chinese economy because of the geographical advantage offered by Australia. Australian imports would help China save up on transportation costs as other potential miners are much farther away from China. Amid these rising tensions, Australia has sensed the need to find alternative markets for its iron ore and LNG exports. For instance, India is just as big of a market as China, and thus the demand for Australian liquid natural gas exports could be met by the Asia-Pacific region, as has been the case with coal. Thanks so much for your time watching. That is all for now. Stay tuned with 𝐊𝐶𝐿 TV for more live market updates. We will be back with more news on the markets, economies and diverse themes and sectors. And this is Sage signing off.